Corporate tax obligations for non-resident juridical persons in the UAE. In the context of UAE corporate tax, juridical persons business entities with legal personalities distinct from their owners, founders, and managers may be subject to tax obligations even if they do not meet the requirements to be classified as resident persons. Specifically, a non-resident juridical person can still have corporate tax liabilities if it meets certain conditions that connect its economic activities to the UAE. These conditions include establishing a permanent establishment in the UAE, deriving state-sourced income, or earning income from immovable property located within the UAE. Each of these conditions is carefully outlined under the UAE corporate tax law to ensure that taxable connections to the UAE are properly defined, even for entities headquartered abroad. 1. Establishing a permanent establishment in the UAE. A permanent establishment, PE, exists when a non-resident juridical person has a substantial, ongoing presence in the UAE, even if it is not incorporated within the country. Establishing a PE connects the entity to the UAE's tax jurisdiction, meaning that the entity may be subject to corporate tax on income attributable to that PE. Examples of situations where a non-resident entity might establish a PE include physical offices or branches. If a company based outside the UAE sets up an office, branch, or other fixed place of business in the UAE, this physical presence typically constitutes a PE. Significant business activities. Conducting recurring and substantial business activities in the UAE may also result in the formation of a PE, even if these activities do not involve a fixed physical location. This can include service provision by staff or representatives, local market operations, or extended contract execution. Dependent agents. In cases where the non-resident entity has dependent agents within the UAE who have authority to make business decisions on behalf of the entity, this relationship may also establish a PE under UAE law. Having a PE generally leads to tax obligations for the portion of income derived from activities within the UAE. 2. Deriving state-sourced income, subject to 0% withholding tax. Non-resident juridical persons that generate state-sourced income are also within the scope of UAE corporate tax law. State-sourced income includes any income derived from sources within the UAE, regardless of whether the non-resident has a PE in the country. However, it is important to note that such income is often subject to a 0% withholding tax, meaning that although it is recognized for tax purposes, there is no actual tax liability on this income under the UAE's current tax regime. Common forms of state-sourced income for non-resident entities include interest and royalty payments. Payments received for the use of intellectual property, as well as interest on loans or financing arrangements connected to UAE businesses, may be treated as state-sourced income. Service fees and technical assistance. Non-resident companies providing specialized services, consultancy, or technical assistance to UAE-based companies may earn state-sourced income. Dividends and other investment returns. If a non-resident company has invested in UAE companies or assets, income from these investments may be categorized as state-sourced income. Although this income category is subject to a 0% withholding tax, non-resident juridical persons should still track such earnings, as they are relevant for tax reporting and compliance under UAE law. 3. Earning income from immovable property in the UAE. Non-resident juridical persons may also be subject to UAE corporate tax if they derive income from immovable property located in the UAE. This income category specifically refers to revenue from real estate assets within the UAE, regardless of whether the non-resident has a PE or derives other types of state-sourced income. Income derived from immovable property can take various forms, including rental income, earnings from leasing or renting out residential, commercial, or industrial property in the UAE, sale of real estate, Profits from the sale of real estate properties located within the UAE. Subleasing and property management. Revenue generated from subleasing, management services, or other indirect property-based activities may also fall under this category. Under UAE corporate tax law, income from immovable property is specifically noted because of its clear, lasting connection to the UAE. Real estate income cannot typically be relocated to other jurisdictions, making it an anchor for tax purposes and subject to tax obligations as defined by the UAE's regulations.